Recording in progress.
Good morning, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the tax man off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. This presentation itself will last about 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some pooling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is agents, consultants, and other professionals. 5 tips to minimize tax expense. And the tax expert for today's session is Jared Smith. Jared has been a CPA for close to 20 years, where his experience spans state and local governments, nonprofits, individuals, and small businesses by providing accounting, budgeting, financial, IT management, pension, tax, and other services. While he believes taxes are important for our government to function and provide the needed service it does, he does not believe we should be paying 1 cent more than is required and enjoys helping his clients find ways to optimize their tax situation. With that said, introducing Jared Smith.
Thank you, May. Good morning, everyone. It's a pleasure to be with you today. One of the first things we need to understand about being self-employed are the taxes that we are assessed while being working for ourselves. And there's two main taxes. We have the self-employment tax and then our ordinary income tax. The self-employment tax is the one that surprises people the most when they're first starting out. When we work as a W-2 employee, we have 7.65% of our income taken out of our paycheck, and then our employer will also contribute 7.65% to the government. So 15.3% is contributed to the IRS on our behalf for Social Security and Medicare. When we're self-employed, we are both the employee and the employer, so we are liable for that self-employment tax. And the biggest key to remember is that this is not automatically deducted from our pay, from our distributions, from whatever we earn as self-employment, unless you have elected to be taxed differently and have a payroll system set up. But then it's not really self-employment tax, it's more of a payroll tax. And then we have our ordinary income tax. So whatever you earn, your net income is added to any other type of income you have. If you're married filing jointly, your spouse has a W-2, or maybe you also have a W-2 income while you're getting your business up and running. Your net income from your business will be added to your other income, and also to your gains and losses, and then the ordinary income tax is applied to the tax tables. One good relief, a couple of good things that they do provide relief for is we get to deduct 1/2 of the self-employment tax from our income. And we also, if our business is qualified, get to deduct 20% of our net self-employment earnings from our income. And that's set to expire with tax year 2025. And again, you should be estimating your taxes quarterly, keeping good books to know what you are earning, and pay those taxes quarterly, so you're not hit with a big bill. I just helped a lady this past week who typically has been in W-2 jobs, and last year she took a contract job doing the same type of work, but it was a dental office that was starting up, and he opted to pay his employees in the beginning as contract workers. And so she had half a year or more of self-employment income. She was hit with a $10,000 tax that she, on a $50,000 income for the year is a little bit hard to swallow. So the purpose of this presentation is to help you find ways to appropriately bring down your net earnings, and to avoid higher self-employment and income taxes. Again, we want you to earn as much as you can, but also take advantage of everything you can to not be taxed more than you should. If you're making millions of dollars, that's awesome. But let's do what we can to not be taxed on that whole $1 million. So as you're starting out your business, you may have some upfront costs. If you're very thorough and you do some market research and analysis, there'll be some costs associated. I didn't do much market research. I just hung out my CPA shingle and started taking on clients and working out of my home. And so it's just kind of low to no market research analysis cost for me. But if you're trying to figure out where to open up shop and what target market you want to focus on, those costs can be deducted. And there are organizational costs. If you engage an attorney to create your entity, if you choose to create a separate legal entity, if you open up a standalone office outside your home, you could have capital purchases, furniture and equipment, and then any planning and development prior to starting, which could include hiring staff, training them to get them up and going. And these costs may be depreciated or amortized, spread out over a number of years. And depreciation is an physical asset that is expensed over a period of time. And amortization is the same type of concept, but they're non-tangible assets, like your startup costs and your startup costs, market research and things that are spread out over a number of years also. Your office costs, you have your rent, utility, internet, office supplies, printing costs, anything that you spend money on to run your office. Make sure you keep good track of those. It's easy just to do what you can, and things may be coming at you like a fire hose at times. You're trying to put things together and set up your business, and they could also be just running really slow. But you could have many different types of expenses, but these are some of the general types of expenses you typically would have. And then for those that are certified and licensed, You're going to have continuing education type of expenses, things to keep you up to date in your industry. You may go to webinars, attend webinars, go to conferences to network and to better yourself and to educate yourself and keep your licenses current, keep your network strong. And these are certainly things that improve your business, things that you could spend money on that you need to pay attention to and don't forget to deduct. Also, if you are in school, there's a lot of college students that are starting up businesses, doing some consulting. I talked with a guy the other day who's gone back to graduate school, and he does some consulting on the side. You could have some education credits available to you in the American Opportunity Credit for undergraduate, and then lifetime learning credits for anything else after that. And depending upon your expenses, it could be the maximum amount is $2,500 to $2,500 available to you to decrease the taxes that you would pay. And then anything you spend on marketing and client services, registration for those industry conferences and events, merchant fees if you attend the trade shows, travel expenses to visit clients, to visit these places that you are attending, dining and entertainment costs. In 2022, the IRS has allowed 100% of dining and entertainment if it was done within a restaurant, and that was to help these small businesses get back on their feet during the pandemic, after the pandemic. And so allowing 100% deduction for dining within a restaurant was very, very good and helped some of these businesses to stay afloat. Now it's back to, we're starting to a tax year 2023. It's 50%, and you do need to take good, have good documentation, who you had dinner with, the purpose of the dinner, and keep those in your tax records. And if you buy gifts that you use for your business, you buy pens, books, cups, whatever you do to promote and that you give to others, whether clients or prospective clients, those are definitely things you'd like to keep track of. Other expenses to consider, banking, credit card processing, financial services fees. If you take out a loan on your business, you can deduct the interest that is assessed, not the principal payments, just the interest that you're paying, any bank fees that your financial institutions charge, credit card processing fees. I know there's a lot of talk about, I can't remember the term they're using, but passing along the credit card processing fees to the client. So, for some businesses, if you use a credit card, is an additional 4%, 3 to 4% increase, whereas people using cash pay a little bit less. And so, but if you end up not doing that and you pay the credit card processing fees yourself, those are deductible because it's not income, right? It's reducing the income that you're getting. You have tax return and financial software, which goes with all the other software. But if you pay someone to do your taxes for you, those are professional fees. If you do work out of your home, you can deduct a portion of your housing costs. For example, if the square footage of your home office represents 5% of your total home square footage, then you can deduct the 5% of your rent and utility bills and things that you do to run the home. And there may be some specific expenses for a home office directly. Let's say you have for whatever reason, you choose to have a separate internet line to your office instead of sharing with other members of your household. That full expense of that internet connection could be deducted. You may need to engage a professional from time to time, and we are professionals, so if you engage in attorneys or other lawyers or whatever to help you, advise you and help you with other matters, definitely keep track of that. Vehicle expenses, business travel, and then one thing that's very important to understand is being professionals, especially professionals that have low overhead, is our profit margins can be quite high, which means that we could be taxed on those high profit margins. We may be making a lot, but again, you don't want to be taxed more than you should. One thing that is should be seriously considered are retirement savings. You can set up a simplified employee pension plan, SEP, where you are also, again, considered the employee and the employer, and you can contribute as the employer up to 25% of your net income put that away. So if you're making good money and you're just putting it into savings, might as well set up a plan that creates those savings tax deferred, and reduce your taxes. So the rule of the day is if you spend money to make money, it is most likely a deductible expense. There are some rules for certain types of expenses, like the meals that I explained, and certain types of travel. If you if you're within range of your tax, what's considered your tax home, you can't necessarily deduct overnight costs and certain travel costs if you're close to home. It's when you are quite a distance from your tax home that those certain travel expenses are deductible. But it's very important to keep accurate records, and I highly suggest you use software to make it easy. There are many different software applications out there that you can connect your bank accounts to, and all you need to do is go in periodically, categorize them. You can even set up categorization rules that automatically categorize them for you, but you still need to go in periodically and look at things and review them. But keep accurate records. And I'm the type that I don't necessarily look for pennies, but I do look for dollars here and there. And I'll ask questions of my clients. Well, what about this? What about that? Did you spend money on this? And because I don't want them to have to pay more than they have to. If you can, if you saw $20 sitting on the ground, would you pick it up? Absolutely, you'd pick it up. And so if I can see 20 way to save you $20, it doesn't take me a lot of time to get you, then absolutely we're going to do all we can to squeeze as much savings as we can. So with that, I will turn it back to May and open it up for any questions.
Yes, thank you for that, Jared. Anyway, yes, we do have a question here. This is from our live viewers in Facebook. And this question is, I am a real estate agent. Is there a different tax rate for me if I select I am in the real estate business for my rental? My wife is not an agent. Would it save me taxes to have the rental in her name?
So being a real estate professional, you are subject to different tax treatment. For example, typically rentals are considered passive income, where you have to follow the passive income rules, where passive losses can only be offset by passive income, and you can only transfer up to $3,000 of losses to your ordinary income to offset your ordinary income. However, if you are a real estate professional, you can it's treated on a Schedule C. And Schedule C losses there's no limits on what can offset. So yes, you are treated differently as having your income on Schedule C as opposed to Schedule E with the passive income limits, the losses limits. So the question about whether you can include your wife on the rental in her name, it's possible. There could be some nuances there. It's not just a black and white answer for your situation. So whoever you engage to help you with more detailed questions on that, but need to get some specifics about your situation. But it could help you.
Okay. Thank you for that answer. So we also have another question. This is from one of our viewers in Zoom. This is from Victoria. And her question is, I set up an S Corp, but I haven't paid myself any W 2 wages. Do you know if I could just manually file a W 2 so I don't have to pay for payroll software?
Yes, you can do that. I apologize. I got something in my throat here. I have a client. He's a single member LLC who elected to be taxed as an S corp, and he pays himself um, not every quarter, but when he does, I just print out forms and send and give them to him. He finishes them out and mails them in. So yes, you don't need to pay for payroll software if it's just you
Mhm.
and you're comfortable doing it manually.
Okay. Oh, all right. So let me just check real quick on our live audience. Okay. That was our last question for today. Anything else that you want to add?
No, I think that's it. I appreciate your time and forward to working with any of you that might need some help.
Yes. All right. Well, thank you also, Jared, for your time. And please check if you have questions or confusions, you can reach out, Jared, one of our experts here. You can copy. Here's on posted. He actually posted his information. You can reach him via email, jared.smout@outlook.com, or via phone call 480 679 2655. Okay. All right, then. So, Jared, I also want to thank you for sparing time. I know you are busy, you have also a lot of things to do, but thank you so much for sharing your expertise and providing us your actual examples. It really helped us a lot. And to our attendees, thank you also. Have a wonderful day, Jared.
Thank you.
All right. So, everyone, I would like to thank you as well for for spending our time here with us. And at the same time, we want to make sure that we're able to help you reduce your taxes and increase your wealth. We do this with the Try Tax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. And we since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com, and please join as a member today for only $19.95 per month. Again, thank you all for attending and have a wonderful day.